Okay, good afternoon and welcome to the Market Wrap for week ending 13th of March 2021. Stuart Williamson here, APW at the helm. Okay, what we're going to talk about, we're going to talk about recent market research that's come out from the big research houses in the UK for property residential and what they're saying about the next 5 years for the UK. Well, the first thing I read this week was that Tom Bill from Knight Frank came out and said on the back of the budget last week, the first thing he had to do was revise targets upwards. Because his quote was, I believe, "It's hard to think of a time when a succession of government interventions has had such a profound impact on the outlook for house prices in such a short space of time." And immediately Knight Frank up to their house price growth forecast for 2021 to 4%. Now, Savills have come out today with their mainstream property forecast, and they say they believe that house prices will go up by 4% this year, possibly more, and then by 5% in 2022. And their quote of the day is, "Our analysis suggests average UK price growth of 20% is sustainable over the next 5 years without unduly depleting mortgage affordability." That's pretty powerful stuff, and obviously being in the property business, it's good to hear. Now, what's it based on though? What are the factors that make it a possibility? Well, Savills have based their current forecasts on confidence. They suggest that, let's just get this right now, the Centre for Economics and Business Research and YouGov run the Consumer Confidence Index, which hit 105.4 last month. And it's the highest since February last year. So that's very positive. The Auditor BDO also ran a separate survey which showed that services sector confidence was at a 12-month high. Now, manufacturing sector is higher than that, but its services is more important because the other people have been worst hit by the COVID situation. Okay, so what are the other things to bear in mind when looking at can these house prices continue to go as they are? Savills suggests it's the following. What impact has most recent lockdown had on people's desire and ability to trade up or move? How important has stamp duty been? What impact will the vaccination program have? I mean, how has it left people feeling? What does it mean at a regional level, i.e. different parts of the UK, are they all going to perform in the same way? And price growth in 2020, was it so great that it skewed the whole market? Now, looking at our own research and compiling these other people's, we believe that all those things are very positive. I mean, the feeling of getting a vaccination is fantastic. Getting out of lockdown is great. There is a certain amount of halo effect in some cities where, the city centres are having a bit of a depression, but outer areas are not. That's short-term stuff, we believe, and that people will return to city centres and it will continue to grow in that way. That quote, "Our analysis suggests UK price growth of 20% is sustainable over the next 5 years," is quite amazing. And it's a great opportunity now, while house prices haven't gone up by that much, to jump in and take advantage of that. Where are the best places to do it? Well, again, according to Savills, they believe overall the UK will go up by 21.1% from now till 2025. The real leading lights are places like the Northwest, Yorkshire and Humber, East Midlands, West Midlands, which are all at over 24%. And followed up by Scotland, Wales, and so on and so forth. London is pretty sad at 12.6% because it's just exhausted itself by being overpriced and over ambitious in its price appreciations. So basically what we've got is interest rates are underpinning, low interest rates are underpinning affordability, which is great. Interest rates are going to stay low for the foreseeable future. Inflation is on the horizon, but as I said last week, inflation will be left aside to keep the economy growing. I mean, there's so much money being pumped into the economies all over the world that's what's going to happen. And there's a great quote from a guy called Stephen Stanley, who's the chief economist at Amherst Pierpoint. He told the FT, "February is really just a down payment on what we should be much larger gains in subsequent quarters going forward." I mean, in the US, there's jobs added has been 379,000 in February. It's the strongest showing since October last year, which is fantastic. So there's a lot of stimulation of the market going on with a lot of money being printed. As long as interest rates stay fairly low and inflation is allowed to have its head, we're going to see a good property market, and I think that will be the case. Now, a bit of other reading I did, which I thought I might share with you very quickly, is the Daily Telegraph said 5 investments that will double your money in 8 years. Online spending. Apparently, it's going to carry on going up and up and up. So if you can buy into companies that work on that. Aging population. The demand for healthcare is almost unlimited, they say. In 2018, there were 1 billion people over 60 worldwide. This will increase to 42% or 1.4 billion by 2030, 16% of the population. People over 60% will account for 55% of total spending. Clean energy, another major area of investment. Automation. And then finally, the middle class. At the moment, in 2018, 3.6 billion people were middle class. This is set to rise to 5.3 billion by 2030. Fast developing societies will create new opportunities. Okay, 5 areas to think about if you want to invest money and you don't want to go into the property market. The best one we would say is healthcare. We do care homes and they're very profitable as long as they're well run. So that's it for this week. Thank you very much for listening. Don't forget to like, subscribe, and tell your friends about it. Thank you very much. Cheerio.